Hey guys, welcome to this week's watch list where we're going to go over the market and some of the stocks that we'll be watching into next week. Okay guys, so jumping in as usual, we're going to take a look at the SPY, of course the S&P 500 here, and what a wild week in the markets. We saw huge volatility. And we did see a breakdown below that trend line that we were discussing in last week's video. So it's definitely notable when we saw this break, and I was talking about in the chat room, said we really have to see where we close. If we close below the trend line, it definitely isn't going to look good. And we in fact did get a close below it there on Thursday. And then today, you know, the market looked really weak and sold off and ended up finding support off a level that I didn't really have marked. It's kind of a minor swing high right there. So right around that 372.46 level where we found support today and bounced off of that. And it wasn't just a small little dead cat bounce. We rallied hard all the way back up over that trend line, and we closed just under the 9 EMA. So I think part of the reason that we bounced to where we did is because of QQQ, or the NASDAQ, and the level that it hit, but we'll look at that in just a minute. So in the grand scheme of things, is this rally, or is this the bottom, so to speak? Is this rally sustainable, or were we seeing a lot of short squeeze on this move? Well, to be honest, I don't know for sure. Obviously, it's a little bit hard to say right now. We are seeing weakness in the tech names and the big growth names because of the rising yields, or one of the factors being that, and Tesla being one of the big stocks that sold off this week. So a lot of opportunities to pick up some of these stocks at a discount, but is the selling over? We just don't know yet. In the grand scheme of things, as I said, if we actually measure it out from the all-time high roughly to the low of the sell-off here on the SPY, we're only looking at a little over a 5% drop. So that's, you know, it's nothing substantial. It's certainly a nice pullback, a nice opportunity to buy into some long-term positions, but it's nowhere near a correction. We're going to need at least a 10% move off that all-time high to really be considered a correction. So while some technical damage was certainly done, the fact that we reclaimed this week over that significant macro trend line that goes again all the way back to that March low that occurred here in the COVID-19 sell-off, it's obviously, like I said, it's very notable. So part of that is because of the rotation that we're seeing. We're continuing to see out of those tech-heavy, high-growth names into more cyclicals, such as energy stocks and industrial stocks, you know, the much unloved value names that will probably do a little bit better in a higher yield environment than those tech names. So as a result, you know, we're seeing that significant difference in the strength here in the SPY. But if we go take a look at the QQQ, of course, that tracks the NASDAQ, you can see that it hasn't quite bounced back as much as the SPY did. And we discussed in the last week's video that it was very notably below this long-term uptrend from that March low there, and continues to remain below that trend line. Now, where we actually bounced here on QQQ was a previous pivot high right here at 297.46, and I mean, we bounced almost to the penny. Really incredible. Now, I wasn't actually watching that level. I was watching this level here, which was the 303.50. We also discussed that in last week's video because that was a previous all-time high and a very significant level where price pulled off of it and then came back up and broke out above it. Now, obviously, these levels don't always have to hold to the penny. A lot of times they will overshoot, and we did see that yesterday. We overshot the level, but we managed to close just above that 303.50. So I thought coming into today, if we could hold above that 303.50, then we might see some type of a meaningful bounce. Unfortunately, we were not able to do that, and we really collapsed and sold off down, like I said, in that 297.46. So is the selling over? Again, it's hard to say. If we go and take a look at our market internals, for the week, you can see that there was, you know, obviously some incredible movements here. Looking at the NASDAQ here, right, we see this big, massive rally here on Monday, followed by a couple of days of down, but nothing super bearish. And then we have Thursday, just absolutely incredible bearishness coming down. And then today we started out, with pretty bearish internals coming in. Again, looked like we were going to have another big bearish day. And then we turned right around and just did a complete V-shaped recovery there. Take a look at the breadth for the NYSE, for the New York Stock Exchange. Again, big move up there on Monday. Then we have pretty much just chop for Tuesday and Wednesday. And then we have this huge bearish move with over -5 to 1 on the breadth there for the NYSE on Thursday. So, like I said, really bearish numbers for sure between the NYSE and the NASDAQ on Thursday. And then again today, we saw it look like we were heading in for another big bearish day heading down. Again, technical damage being done. It looked like the market was really going to tank all day long. And we saw this massive turnaround. And, obviously you have to believe that some of this is going to be short squeeze because shorts didn't get the continuation move higher, and you start to you kind of get this point where stocks start to cross over that zero line and you see this move higher. So that's why I say, is this sustainable? We don't know yet. We're going to have to wait and see next week. So as a result, this week's watch list is going to be a little bit difficult. I'm just going to run through a lot of the names and give you my thoughts and kind of what I was seeing throughout the week. So like I said, look at this advanced decline line for the NYSE, massive V shape there. Same thing with the NASDAQ. So pretty incredible internals. So hopping back over here to the chart, I want to pull up IWM. That, of course, is tracking the small cap Russell 2000. One of the things that we talked about in last week's video was the fact that we had this fib here, the 61.8, and it was drawn from the low of that pullback to the new all-time high. And I was talking about we really wanted to see that level hold here for any meaningful move back up. And if we were starting to break down below that, we were probably going to be looking at least first testing this 50 MA, which we did on Thursday, and we managed to close actually just slightly above it, actually right on it there. And then I was also mentioning that if we did break down below that, we were probably going to be coming down here to the swing low. We didn't quite get there because what I had missed in TD Ameritrade platform, I didn't have it marked out like I do here in eSignal, but there's a macro trend line. So I'm going to zoom out on this and kind of bring this into frame. You have to go all the way back here to, what is this, kind of the middle of 2015. You can see this macro trend line that comes in there, and there you've got a couple of touches here in late 2018, and really didn't come back into the picture until this year, where you can see that price came right up into it, rejected initially, held it as support, broke out above it, came down again, tagged it as support. That's that low basically of this past pullback, and then a push off of that to a new all-time high. So today coming right down into that macro trend line and bouncing off of it. So that's a very significant trend line that we should be aware of. And so far, IWM seems to be bouncing off of that. So it does still seem to be relatively stronger compared to the SPY and the NASDAQ, for example, because you can see, obviously it hasn't pulled back quite as much. Looking at your weekly chart, again, hop over to QQQ, just a quick look at the weekly chart. You can see that we closed above the 20 MA, but a nice long wick below it. So again, we don't know that the selling is over, but we definitely were talking about the topping pattern that was potentially developing on that monthly chart. And we're starting to see a little bit of that play out. So there's still obviously, room to the downside here in the market. So I don't want to necessarily call the bottom in yet, but in terms of percentage from the all-time high on QQQ down to the low of the pullback, we did get actually a correction. We saw a 12% pullback there on QQQ. So definitely notable that the Qs did hit correction territory where the SPY did not. So let's go to the SPY chart one more time here. There's your monthly chart. So far, not a lot of change there. Obviously, indicative that we are seeing some strength in SPY compared to the NASDAQ, and part of that is because of that rotation we talked about. So just a quick run through the sectors to kind of help you visualize that. Here's your technology sector. As you can see, obviously very different from what we're going to see in the other sectors. So, some technical damage done here, some sell signals on the way down, so far bouncing off that 100 MA. And again, we're just going to quickly run through these. Here's your healthcare sector. Again, decent size pullback here in terms of percentage. We're talking about it's about a 7.5% drop there. Consumer discretionary, again, these are the stocks and the sectors that are obviously not going to be performing as well in a high yield environment. So from the all-time high to the low of this pullback, we're talking about We're talking about 13.5% there for that pullback. We'll go to communication sector here, and this still looks bullish. We're basically just consolidating up here, possibly looking for a leg higher. So obviously we're seeing that that would be one of the sectors that rotation is moving into. Out of tech, financials is another one where you see obviously still bullish, obviously still hanging out up here. Look at your weekly chart though, notable that we are quite extended. So it's possible that we'll start to see some of these other sectors that have been doing well while technology is doing bad. It's possible we'll start to see some of those pull back and maybe some bounces in the technology sector and the consumer discretionary that hasn't done as well. Again, just running through a couple more of these. There's your industrials, again, bullish, just consolidating, possibly looking for another leg higher. Here's your consumer staples. Obviously, this is another one that hasn't done very well, pulling back there. Utilities, really a decent sized pullback here in the grand scheme of things. So just a few more. There is your real estate. That one's pulling back. Real estate will probably not do as well when yields start to climb. And you've got your basic materials. This is another one of the value type stocks that we're obviously seeing some rotation into. So, this has been consolidating up here, possibly looking for another run higher. And then, of course, energy has been the outperformer. Really strong close up here. It is getting extended. Obviously, look at your weekly chart. Very, very extended at this point from the 20 MA. So I wouldn't be surprised to see some of these pull back eventually. But as of right now, that rotation continues to be in place. All right, so I want to do something just a little bit different. We're going to take a look at the market profile for the S&P E-mini futures. If you're not familiar what this is, I have a video on my channel that explains this, and you can also find more information about this on the Shadow Trader YouTube channel. He is actually the person who I've learned this from, and this is actually his template that he uses. So if you're familiar, you probably have seen this, this software, but basically what this allows us to do is look at both price and time to get a kind of a more in-depth picture of what actually went on in the market. So again, we're looking at the S&P E-mini futures. And when we look at today's distribution, you can see that it's very elongated, and we have a very, a very elongated value area. So we have this really, really large value area, the same as yesterday. And a big part of that is because of the incredible volatility that we're seeing. But when we actually zoom in on this, you can see that there is some areas of single prints here. And right here, you can see this area of single print. What this means is that we didn't really spend hardly any time here in this area. Price kind of shot through there. And that is a little bit indicative of short cover. And that's why I'm kind of putting into question, is this rally sustainable? It certainly, it looks good on the charts, but is it sustainable into next week? Was that the bottom of the dip? And are we in fact going to start moving back to the all-time high? Now, when we look at this, where we rallied up into was a prior virgin point of control from right here from, I guess, what is that? March 3rd. So we rallied right up into that virgin point of control, went over it just a little bit, and then pulled off of it and ended up settling just a little bit lower down here. So it makes complete sense that we did rally into that virgin point of control. And again, I think a lot of that probably was short cover. So that does put a little bit into question, the rally sustaining itself into next week. So when we kind of zoom out on this and we look above us, what kind of supply picture are we looking at above us? And you can see that there is a considerable amount of supply above us. Okay, and so we're obviously down here. Today's high was down here. So for the S&P to start moving back up to the all-time high, it's going to have to start moving back up into all of this previous value area that basically occurred throughout the month of February. So if the S&P can actually move back up into this value area here, we can find acceptance in this value area, then we would probably see a positive case for the bulls to possibly move back up to the all-time high. But as of right now, obviously the path of least resistance looks like it's going to be down because of the fact that we do have all of this overhead supply. Okay, so the fact that we rallied right up toward the bottom side of that overhead supply makes sense. But was it just short cover, or was it actually a buy the dip situation? Obviously that remains to be seen, but it's very helpful to see that, all of this balance area over here, all of this overhead supply is considerable. And so we definitely have a lot of work to do to get back up into that area. So right now, I think the path of least resistance is down. So I'm cautiously bearish, but I'm hoping that, obviously the dip does get bought and we can rally back to all-time high for our long-term position's sake anyways. So a quick glimpse at the market profile. I'm not going to dive too much into it. Still studying it, but we'll continue to include it in these videos as long as I find value from it. So a quick run through the majors. Let's take a look at Apple. We saw that Apple did bounce off of this trend line, a little bit of an overshoot, but it did bounce off of it. We were discussing in last week's video, and we got above that 120.5 level, which was definitely an important level that I was marking out here, where we can clearly see price resisting below it and then moving above it. Okay, so we are trying still to hold that 120.5 level coming into next week. Since we have closed above it, we could possibly see a move back up into this pocket if the buyers continue to come in. If we didn't just see a short squeeze today, if we see legitimate buyers into next week continuing, then Apple could see a move back up into the top part of that range. That'd bring us up to that 126 area where we had clear support here from all of this kind of basing and range action right there. So a little bit of a pocket there up to 126, and then possibly if we want to continue higher after that, you've got another pocket up here to the top end of this range here and the bottom end of this range. That brings you up to around that 132 area. So as of right now on Apple, really kind of expecting this trend line to hold and a possible bounce play on a lot of these downbeaten tech and growth names. And we'll see if it's just a dead cat bounce or if we legitimately see the dip get bought here. Obviously, any move down below that trend line into this pocket, as discussed before and posted in my chat room, we do have significant area to move down towards that 200 MA and this kind of 112 area where we had pullback support right there. So kind of leaning towards the upside there, but we'll see what happens next week. Just keep in mind that 120.5 level and that trend line right there. That's going to be significant support that could help us move back up into that range. So taking a look at AMD, we saw a beautiful bounce off of the bottom of this very macro range. We were talking about the fact that 1, 2, 3, 4 times price has touched this level. It's actually the top of a gap, so you do have a little bit of an unfilled gap below it. I was also kind of eyeing this trend I drew on the chart from back here in March of 2020. I guess that was actually the low of the COVID sell-off. We've got it anchored there. Price came in and interacted with it here on Thursday. Initially bounced off of it, but today we overshot it and then found the bottom of that macro range before we did leave behind a nice hammer candle here. So I do like this hammer candle. It is definitely conducive for some possible upside here on AMD. Could see us move back up into this range, possibly targeting around this $83 area. Keep in mind, you're also going to be having that, you're going to have that 9 EMA kind of coming into the frame here as well. So there is, like I said, some balance potential in some of these downbeaten tech names. We will have to see if that continues in the NASDAQ as well, or if we were just seeing the short cover as we discussed this past Friday. But I do like this potential bounce on AMD here. Really like the candle it formed and the fact that it bounced off of that very macro level that we discussed in last week's video. So here is Amazon, and this is one that we talked about a possible short if we could see a breakdown below this level, looking for a target on this swing low here at 29.50 and then an ultimate target on that swing low at 28.71. We just about got them both, so really good job there if anyone was able to catch that. Amazon's not the easiest to trade, but it bounced right up into this trend line here and rejected, which I talked about I didn't really like along because of the possibility of that happening, and that worked out absolutely beautiful. Came all the way down. So as of right now, again, similar situation. We're leaving behind a hammer candle for today. So I would not be at all surprised to see Amazon get some kind of a bounce back up here. Probably at least into your 9 EMA. You've also got that 200 SMA coming up, so maybe it bounces up into that 200 SMA area. So there could be a trade there above today's high, to Friday's high, and then possibly, like I said, up into that 200 MA. So really good play there on Amazon. Again, expecting a little bit of a bounce on that along with several of the other names. Moving on to Microsoft. Again, this isn't one that I tend to trade very often, but you can see on the weekly chart, we didn't quite tag the 20, came in just shy of that. But if we zoom out here on the daily chart, you got a trend line again coming in from the low of that March sell-off. You've got it anchored here, and really a perfect tag here, kind of lining up with this prior pivot high resistance there. So kind of like that 225 level and bouncing off of that. So as of right now, we are rejecting off of this pivot high here at 232. So if the bulls are going to have any hope of pushing prices higher, Microsoft needs to get back above that 232, in which case there could be a possible trade there. I'm just noting that there is an unfilled gap right here. So maybe Microsoft sees a move up into the bottom side of that gap where it probably will at least initially reject. So there could be a trade here in this pocket above 232 to the bottom side of that gap, which is roughly around 238. So here is PayPal. Now this is another one of the stocks that got beaten down pretty badly. Came right into support here at 225 where we previously bounced here and here. Was looking at this possible trend line here, catching support, and looked like it might do it on Thursday. Just managed to close right above it there. But big move below it here on Friday along with the big market volatility. Pretty interesting to see that buyers stepped in there off the 225. Certainly made sense. You've also got some alignment here with your 20 MA on the weekly chart. And the fact that we closed above this trend is also notable. So on PayPal, if we can see any kind of a bounce back up, I would expect to see this 254 again. So I think there's a trade there on PayPal. Probably be looking for a move above Friday's high and then be targeting that 254 level right there. So here is ROKU. This isn't one that we look at really that much, but definitely notable that it bounced off of the 20 MA there on the weekly chart. And looking at the daily chart, I've actually got a macro trend on this that goes back to kind of late 2018, where it starts here, it's anchored here, and really didn't see any interaction with it until most recently here, where price broke out above it here, came down and back tested it there, and then really had a big push up into a new all-time high. So today we came right down into that macro trend, overshot it a bit with the volatility and everything, not to be surprised, but we did reclaim it. And we're closing just below this 363 level where we have a previous breakout point right here. So I think for ROKU, possible trade to be had moving back up into this pocket here to around 380 area at a minimum. You're also going to have your 9 EMA. So kind of a similar story on a lot of these names. Possible retracement back up into those daily 9 EMAs. The only catch is that if we have a big gap up on Monday, then we're probably going to be gapping up right into those daily MAs. So it's going to be a little bit trickier at that point. We're going to need for things to kind of wash out in the morning, find support, and then rally. So we'll have to see where things open. But again, looking for some type of a bounce on a lot of these downbeaten names. Hopefully we don't gap up too much on Monday, but we'll just have to wait and see where we open. So the last thing I'm going to wrap up with here is Tesla. When we look at our weekly chart, pretty massive pull off of the all-time high. I've drawn a fib from the low here in March to that all-time high, and that brought in our macro fib levels. I believe we discussed in last week's video, that 38.2 right there around 583. We've tested that, and then we have the 50% still below us that remains untested, and even further below that, you've got the 61.8. So I'm not necessarily saying that it's going to get there, but just noteworthy that these levels are below us. Now, most likely what would happen here if we continue to sell off is we probably would want to test this pivot high right here, which is right around 502.5, call it that 500 whole number. We couldn't quite get there today. We actually ended up bouncing off of this pullback low right here at 541.29. I was actually playing a broken wing butterfly off of this trend line right here. I was kind of thinking that would be a high probability buy point. And I ended up opening 2 butterflies on that, and it sailed right through my middle strike so quickly that I went really red on the position, and all of a sudden I had to get into really risk management mode. Ended up taking the trade off for a very small loss, but kicking myself right now because it would have worked out beautifully I just honestly didn't think that we were going to rally as hard as we did because things looked so bearish. But nevertheless, you live and learn. So we did bounce off of that, like I said, that pullback low there at 541 and got back above this macro trend. And yeah, again, that trend kind of comes in. Zooming out on the chart, it kind of comes in right here, this area here. There's that first trend I was looking at, and then we actually have another trend that comes off of the March low here. So this trend might be more significant should Tesla continue to pull back, and that actually is lining up beautifully with this pivot high here around 500. So if the selling's not over and Tesla does come back down, let's kind of keep an eye on that. I'm not saying it's going to happen, but it's noteworthy that it's there. But we couldn't quite get there this week. Obviously, from all-time high to the 541 here, I believe that was about a 40. Was that a 40% pullback? It was 38%, almost 40%, you can call it. So that's significant. And I think as price approached that kind of 40% mark, buyers really stepped in there. When you see something like Tesla that's on sale 40% cheaper than it was from its all-time high just last month, yeah, I mean, obviously that's a bargain. I even picked up some shares in my long-term portfolio, so it definitely makes sense that buyers would step in there. It's very likely that we'll see some type of a bounce into next week. So I think right now, one of the levels I'd be looking at is the 600 level, that very whole round number. We traded right up into it today and pretty much just stopped right there, as you can see, right there at that 600. So I think for next week, we need to see price get above and hold that 600. If we can do that, then Tesla has a chance to at least see some type of a relief bounce. We are quite extended away from the 9 EMA. So I think Tesla is probably going to be one of my top watches into next week. Certainly into early next week for some type of a bounce higher given the extended nature of the chart. And then we'll have to see once we do retrace into that daily 9 EMA, can price basically sustain that move and continue higher from there? Or do we pull all the way back down to the lows and maybe head even lower given some of the fundamentals that are driving the price lower, including semiconductor shortages, rising yields, which obviously is bad for these growth stocks, among other things. So on Tesla, again, let's keep an eye on that $600 level. We want to see price above that for any type of a retracement higher, possibly into that daily 9 EMA. And again, it's also going to depend on where we open. If we open with a big gap up on Monday, we're really going to need to see these stocks pull back off of the open and find support before we could possibly look at bouncing them. Otherwise, if it's a big gap up and they don't pull back, it's going to be a lot more difficult and probably could be choppy. So we'll have to wait and see, but there you go, guys. Today's watch list was very difficult given the extreme moves in the market. These high volatility environments can be incredibly difficult to trade. So I stress to be very cautious, size appropriately. Really just kind of have to size down and look for those bigger moves. It's a little bit more difficult to try to scalp with size in these higher volatility environments, especially with options. When the implied volatility is so juiced up in these contracts, they won't move quite like you would expect sometimes. So that can make trading, especially scalping, a little bit more difficult. So just express some caution, guys. Trade safe and let's have a green week of trading. Thanks for watching.